Hello guys, you are welcome to our tutorial for today where we shall be diving into the introductory part of technical analysis. And for us to be able to get into this, we'll be talking about candlesticks and its psychology. And before we go into this, I want to use this opportunity to please subscribe to our YouTube channels, Instagram, TikTok, and Facebook with the name Tradersroom. So let's get into business. Technical analysis, introduction, candlestick, and its psychology. When we are really talking about technical analysis, what do we mean? Technical analysis simply means the study of historical price movement in order to make an accurate decision of what the price may do next. So, in order for us to be able to get ourselves grounded in technical analysis, we need to know what is candlesticks and what are the things behind candlesticks. So this is how a candlesticks looks like. When we say candlesticks, it is at times we put it red or and green. Right, the color does not really matter, but generally this is the color that always come out with being bullish, get greens, and the bearish you have a red color. So what do we really find out, or what is this all about when it comes to candle? When it talks about candlesticks, yeah, we see the candle has the high, which is the top here. It has the close time. It has the opening and the low. This is the bullish part. Then in the bearish area, you find out that it has the high, which is the same as it, but it has the opening on top, where the bullish has the close, and it has a close below where the bullish has opening. That's only difference in the two. So when we talk about candlesticks, from here to the end of this place is called the body of the candlestick. Why this one to this place? This is the wick of the candle, where there are some people that call it shadow. Then in the candlesticks, you find out that this candlestick has a wick up and also a wick down. What is the psychology behind these two candles, whether being it red or green? So the psychologist of this candle is that when the market open, let's say for example the time frame of these candles, all the candles we are going to use today, let's say the time frame is a day. So the, let's say in the morning when it opens here. The psychology of forming this kind of candle is that by the time it opens, it might get to at a time the candle was set, they were buying. Later, the seller came and pushed it down to this area. Then the buyer said, no, we are not going to accept this, and keep on pushing again until they get to the opening, and keep pushing until they get to the high. But before the day closed, the seller came again and pushed a little and come back, and the market closed here. So that is the formation, the psychology of this candle. It's still the same with the red, where you find out the bearish, where you find out that it gets opens here, there, and close here. But what happens at a particular time, probably it get to this area, the low, and the buyer came and pushed it back. So that's the formation of these two candles. So when talking about candlesticks, we have various candlesticks. Must you learn every candlestick? No. But you have to know the psychology behind a candlestick so that you can be able to interpret every candlesticks. It does not really matter whether you know the name or not. At times I see people giving it their own names, something like that. But that doesn't really matter as much. What matters is that you are able to know, get interpretation of what a candlestick is telling you at a particular time. So these are various candlesticks we'll be talking about, and we are going to talk more about some that are not here. We'll be talking about the long candles and the short candle, the shooting stars, and other. So, like I said earlier, it doesn't really matter you cramming or trying to know the names of all these candles, but you must learn how to interpret a candlestick in order for you to be able to interpret every candlestick. There is no candlestick that is not important. All the candlesticks are important and tells you something for you in order for you to take a decision whether to go into a trading or not. So the first one we'll be talking about today is the long and short candlesticks. So when we say long and short candlestick, you can have long and short in the green and you can have long and short in the red. But here I just put the long one, which is the bullish, the green, the red one is the short. So what is the psychology about this candle? And what does the candles tells you? If you find out that in this candle, the market opens here during the day, sellers came and pull it down. Then the buyer said, no, we owns the day and push it up. At a particular time, this market get to this height. And the sellers came again, push it down, and the market closed here. So even though the sellers were able to make an impact, you find out that we still have a big body. You find out that the body of the candle from here to here is still big. That really shows that the sellers were taking control of the market. What the seller actually did does not really have much impact on the market, but it was the buyers that take total control. So we now go to the short candlestick. So in the short candlestick, you find out that the seller opens here with his price. And when they open, maybe getting to a certain place, the buyer came and pushed it up. Then the seller said, no, we don't want that, and push the market back again. And as they were pushing it back, they get here, even get to this place at a point. Then the buyers came again and pushed this back. And at the end of the day, the market closed here. But if you find out, if you check the body of the candlestick, you find out that it's not that big. So what does that mean? That the even though the seller were able to take the day, what the buyers actually did has a great impact in the market. That's what makes it to reduce the body of the candle. So that is the psychology in between these two candles. And seeing these candles equally helps you to make the decision during trading when you are on your chart. So the next candlestick we talked about is the Maribuzo candlesticks. The Maribuzo candlesticks can either be green or red. It can be bullish or bearish. You find out that here, the market opened here, and the buyers push it throughout the whole day, and they end up here. You will find out that in the body of the candlestick, the seller didn't do anything. So it was the buyer that have the day. The price just keep on going higher, 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 and higher. So in the Maribuzo bearish, you find out that it get opens here and it get closed here. And the buyers in the same way did not do anything during that day. And it was the seller that were in total control. So that is the formation of these candlesticks. But the psychology, things behind this is that this helps you to know, oh, since I have a Marubozu bullish candlesticks, this means that the next candlestick that is going to come probably is going to be a green candlesticks. Why? Because we find out that the candlesticks that we have here is very powerful and the buyers were able to take the day. It's the same thing as the bearish. when you have a Marubuzol bearish candle, there's a great possibility that you are going to have the next candle going downward. You are going to have the sellers taking control of the market. So the next is we are going to talk about is the same is the opening and closing Marubuzol candlesticks. If you find out here, I brought out the two candlesticks, the full Marubuzu candlesticks. So you have them here. But look at these two, the Marubuzu opening and the Marubuzu close. And the Marubuzu open, what happened? Let's look at the green color. We found out that the price opened here, and by time the price opened, it was Marubozo. There was no candle. The seller could not do anything. Then the price moved all straight until it gets to this top. But during the closing time, the seller came and pushed this to this area. And that shows that, yeah, it started as Marubozo, but in the closing time, it does have weak. Is it still the same thing as the bearish? You find out that it opens as Marubozu opening, but during the closing, this buyers came and push it, and the candlestick close here, and that's why we have this body. So, what does this formation tell us? It tells us that, like in the area of the green, the bullish, it shows that the buyers were in total control, but at the end of the day, before it closed, the seller came and pushed little from here to this place. So that equally shows that even though the buyers are in control, but there was also an effect of the seller. That will equally help you to make an informed decision of what you are going to do on your trading. So the same as the opening in the revised form, that's how we have the closed Marubozu candlesticks. You'll find out that, for example, this bullish, it opens here, and probably when it opens, the seller came and push it. When it gets to the low, the buyer said, no, we are going to have this day. They push this up, 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 up until it gets to the top, and it did close as Maru Bozu. Yes, and this place you find out that, yeah, it did start here in the Maru Bozu close. You find out that it did open here, the market opens here, and maybe probably is by the time it opens, the seller came in the morning and pushed the market down to this area. But the buyers push it back and say we own the day and push it until it gets to this top. And that was when the market closed for the day. So what that really means is that the buyers were able to take the day. In the other area, the Marubuzol close in the area of the bearish, you'll find out that, yeah, when the market did open here, possibly the buyer came and pushed it a little until it gets to this top. Then the seller now push it down until it gets to this and the low, and the market close for the day. So what we find out in these Marubozu close and opening simply means that each, either the buyer or the sellers, they had the table with very little effect of what the opposite did on that particular day. So now we will go to another candlestick, which is the spinning top candlestick. When you say the spinning top candlestick, you'll find out that it has a long wick, a long shadow. It can either be a red or green. Then it has the opening and the close. You can see the opening here and the close. Then you find out that the body of this spinning top is very small. The name of this candlestick comes from the spinning top toys that we all have as kids. We play with it at one time in our life. So by the time it spins, you find out that the body is not that big, but it has its low and the top. And that's how this one is got the name from. What is the psychology of these or the formation of this candlestick? Let us start, for example, with the red, which is the bearish. The market did open here. So by the market open, maybe it gets to little to this area. The buyers came and said, no, we are going to take the day and push this market to the high. But the seller said, no, we own the day. They push it back again to where it opens and push it down and push it down until they get to the low. But the buyer still came, did not give up, and start to push it again until it gets to this place before the market closed for the day. And that's the same thing in a different form that happens when it comes to the bullish area. So, what is the formation? What is the psychology? What is this candlestick telling us? That things are not stable, that both the buyers and the sellers, they are in a great rivalry. Each of them want to say, okay, I want to own the day. The other one say, I want to. So you now ask yourself, is this the right time for me to get into trade and trade? So that's why I say each candlestick is very important. No, do not allow anybody to tell you that you don't need to know every candlestick. No, you don't need to know their name, but you need to know the formation, the psychology behind every candlestick in order for you to be able to make your decision and where that candlestick it is in your chart. So the next candlestick we're talking about is the hammer and the inverse hammer candlesticks. So when we talk about the hammer and the inverse hammer, we talk about the hammer first. It can either be a green candlestick or a red candlestick also. It is a candlestick that has very little body at the top and has a long leg, a long shadow or a long wick. So it is on the like the shape of a hammer that you can use to hammer things. Let us look at the grain. The market did opens here, the grain. So when the market opened, the seller came and pushed this market and said, no, even though you open, we are going to, they push it to this area. And they were gaining the day. Not until the buyers came and said, no, we we have a fault also and push it back, get to original position and push it little and get to this top. But by the time they get to this top, the day was almost gone. The effects of the seller do not really have something to show in the candle any longer. So the market closed, the trade closed here. That's why we have this little body. So what is this telling you? That even though the buyers have the day, the sellers equally have a great effect on that day because there is a long leg, which is a long shadow for the day that where the sellers operated. So it is the same in the area of the red. You find out that it did opens here, and by the time it's open, as it was going down, it might get to this area, to the end here, to the low, but the buyers came and pushed it back, and the market now closed on this area. So what does that mean? That the buyers, even though the sellers take the day, the buyers was equally able to do more in the during the day. So we now go to the inverted hammer. When you say inverted hammer, it's the same as the hammer, but in an inverted form. So here you find out that the shadow is no longer below, but is on top. So just as we explained in the area of the bullish and the bearish in the hammer, is the same, but in the opposite form. Like here in the bearish, the market opens here. So as the market opens at a time, it goes straight and end here to the top of this place. But the sellers came and said, no, we don't want it like that, and push it, and get to this area, and the market closed here. So that's how the day was done. So the same thing as in the area of the bearish. Then, having said about the inverted hammer, let us look about the shooting star. When we say the shooting star, we find out that this is the uptrend, and why this is the downtrend. So if you find out that these candlesticks is smaller than this particular one when it comes to the body. You find out that in the first one, the market opens and closes. Then the second one was bigger, the momentum was growing, getting higher. Then we now have something here which we might call the spinning top. It happens yet, a kind of indecision what is going to happen. But at the end, we now have something that is in the form of a inverted hammer. And this inverted hammer being on this pattern is called the shooting star. So in the shooting star, you find out that the market opens here and it move high until it get to this area. The buyer push it. But the seller came and pushed the market back again, and then the market now ends here. And that's how the market closed for the day. So what does that really mean? That even though the seller has upper hand, but at the end of the day, the buyer has upper hand. At the end of the day, the seller was the one that were really active in the market. So in most cases, when you come to an shooting star like this, you see a shooting star like this at the top of any chart, it shows that probably there's a great possibility that the next candle is going to be a different color. If it ends with green, it's going to be a red. Or something like that, vice versa. So you should try to know what is behind the formation of this candle in order for you, like I said earlier, in order for you to make the right decision. Then the next candlestick pattern we'll be talking about is the morning stars and the evening stars candlestick. So in this area, we have the candlestick. Let's say this is a red like this. It was coming down, but at the end, you have this morning star here. So the morning star is also like a little, like the spinning, but with little wick or shadow. So when you have this, it ends like this on the day. There's always a possibility that there's going to be a reverse in the trend. So when it gets here, you see the next one was not green, it begins to move up. So each of these candles, even though you don't know that the animals are said, try to know the formation around them, the psychology behind them, and where they are in your chart. That one will be able to help you to make your decision on what to do next. So in the evening star, you'll find out that it's the opposite. The green was going, but by the time it gets here, the next this one now turned red. So which means that it's always a great possibility that there's going to be a reverse in trend. Though it is not 100% sure, no we trade on probability, but there is a great probability that it is going to reverse in the trend. So I would like us to go to the last candlesticks that we'll be talking about today to round up this video in order for this video not be too long, is the doji candlestick chart patterns. So we talked about the formation, the types, and the strategies about these one. This is the doji candlesticks. You find out it's just like in form of cross, the classic doji. So what is the formation of these? Let's say, for example, all these dojis are bullish. But they can be bullish, they can be bearish. It doesn't really matter which color, but let's assume they are all bullish for today, or for the purpose of this lab. The market start here, it opens here. And by the time it opens, the seller came, and the buyer pushed it to this area. But the seller came and said no, and pushed it back to its original base, and even passed and pull it down. No, the buyer said, no, we are not going to accept this for today, and push it back again and end up in the area it opens in the morning before the day close. So, what is this candlestick telling you? Irregularity. Even though you might not know the name of this candlestick, this is when you see a sign like this, it's showing you, oh, both buyers and seller are fighting. So because of this fighting, they are fighting at this particular time. Should I go into the trade? Will I be able to get my money, or am I going to lose money when I get into this trade? So it helps you to make a decision. So the long leg doji is in a form of cross, but you find out that the body is little higher, while the wick downward is longer. So what is this one is telling us is that, let's say it's still green, as we said, the market opens here, but it is the seller that came and pushed it hard. They were really trying to take control of the market that day, but they couldn't because the buyer come and said, no, we will not accept this, and push it until it gets to this top. And by the time it gets to the top, the buyer said, no, we would try to do, and the seller said, we will try to do something again. And they push it back, and by the time they push it back, it ends in the original area where it opens. So that's where it formed this. Then the next one is the dragonfly doji. In the area of the dragonfly doji, let's say, for example, like we said that we are going to make all these green to be a green. Let's say the market opens here as green. But as the market opened, the seller came and pushed the market down. So as the market get down, it was there by the buyer said, no, we don't want. And the buyer pushed the market up again and get to its original position. And from there, the market closed for the day. Then the opposite side is the gravestone doji. The gravestone doji, you find out that is the opposite of the dragonfly. The market opens here and it moves up to this area. The buyer was in control, but the seller said, no, we want the price in its original area. They now came and pushed this price until it gets to this place and the market closed for the day. So the last candlestick we'll be talking about today is the four price doji. And this four price doji was, why is it called four price doji? Because you have the high, you have the low, you have the opening, and you have the close, four in the same area. It's just a straight line like this. So what is the psychology behind it? Is that when the market opened, the buyers didn't do anything, the sellers didn't do anything. It was just there. So even though nothing really happened, but this is something that will help you to make a decision. Neither the buyer nor the sellers are willing to get into the trade. So why wasting my time? So that will equally help you to make a decision that you want to leave the trade. You don't want to do anything. So, gentlemen, this is all we'll be talking about candlesticks, which is the introductory part of technical analysis. As we said earlier, you do not really need to learn the names of all these candlesticks, but you do need to learn the psychology, the formation of each and every candlestick and where they are on your chart in order for you to be able to make a decision whether to get to buy or sell or to get into trade at all. Thank you very much for listening and watching this video. In the next video, we'll be talking more about technical analysis. But before you go, click the like button, share, and subscribe to our social media platform, Traders Rooms, in order for you to be able to get our subsequent videos, and give us a like so that others can equally see this video as well. Stay tuned and have a wonderful day.